I'm Alan Kinney with REIT.com, and I'm in Washington, D.C. for NAREIT's Washington Leadership Forum at the St. Regis Hotel. Joining me is Jay Leupp, Managing Director and Senior Portfolio Manager with Lazard Asset Management. Jay, we're almost 2 months into the year. Just give me some early thoughts. What's been going on with the REIT market the first 2 months of the year?
Well, off to a pretty good start, Alan. We're up about 8-9% so far into the year. It was a little shaky at first. January was a bit rocky. We actually traded into negative territory early on, and then we've seen a gradual strengthening of the REIT market. We've had good solid earnings reports. The interest rate environment looks benign, and it looks like the economy is probably going to grow a little bit faster than most investors are expecting or predicting.
And you manage assets both in the United States and abroad. Wondering, what are some of the major developments in the international stage that you're looking at?
Well, let's go around the world because we are invested globally, not only in the U.S. but in North America, both in Canada and in Mexico. Those are areas where we're investing. Canada, the Canadian picture looks pretty similar to the U.S. Maybe slightly faster economic growth, maybe slightly slower earnings growth. Mexico is a market that we've liked for some time, and I think the question this year is that if the rally that we've seen in the last couple of years can continue, and whether or not Mexico is tarred with the emerging markets hurt that's happening in other areas of the world. In Latin America, we're looking for bargains in places like Brazil and Argentina, although we haven't been real active yet because we still think there could be a little bit more downside. In Europe, we've been invested for some time, and we are looking to invest in high quality assets in markets that have yet to recover. We're seeing some modest economic growth this year for the first time in a long time, so we're optimistic that there are some bargains in Europe. And then in Asia, the real big questions for us are in the major markets of China and Japan. We're looking to see if the current policy restrictions that the government has put on local banks and on local transactions in China will have a negative effect on their real estate market, or if in fact they may have the effect of limiting new supply. And in Japan, Abenomics and monetary policy are really the drivers of stock price performance in Japan, and we're constantly gauging and evaluating how that will affect Japanese property markets and ultimately Japanese share prices. We're less invested right now in emerging Asia, although we're looking for bargains. We like the growth prospects of emerging Asia. And in Australia, we like the stable economy. We think valuations may be a little bit expensive, but we're looking for bargains.
All right, let's bring it back to the United States. We're here obviously talking about a lot of policy issues here in Washington, D.C. right now. Can you give us an idea, what are some of the big policy questions that you're tracking at the moment?
Well, the biggest one is the acronym FIRPTA, the Foreign Investors in Real Property Tax Act. We're looking for FIRPTA reform as part of NAREIT and REIT PAC. And what we're hoping is that, among other things, the most important issue is allowing foreign investors to invest more than 5% in both real estate investment trusts as well as in real assets, allowing more equity and debt liquidity to flow from international markets into the United States. We think that this would have a very positive effect on both U.S. real property markets, U.S. capital markets, and ultimately would be a good thing for both U.S. investors as well as U.S. taxpayers.
All right, well, thank you so much for your time, Jay.
Great, good to see you again, Alan.
And for more on this and other REIT news and analysis, be sure to visit REIT.com.